Back to January 27th. Alright. So here we are at January 27th. If I fast forward a little bit, first and foremost, before we look at the charts, we're always going to look at news. So let me pull this up real quick. Alright, so for January 27th, 2025, what does the news program look like? Through 30th. So Monday, no news. Typically when there's no news on a day like this when it comes to trading, we're going to be very patient. We're going to wait for our setup to perfectly populate and make sure that we have an ideal point of interest for us to actually support our trade. If we don't have any of that, we're not going to look to enter any trade because there's not going to be any volatility whatsoever that's going to be driving fuel or giving the trade momentum in order to push to an area of liquidity. So real quick, I'm going to go ahead and start off on the daily time frame. Is it still showing trading view for you guys?
Yeah, I can still see it.
Okay, cool. So on the daily time frame, we're on NASDAQ right now. Price is currently trading right at the equilibrium level of this zone between this swing low and this swing high. So when price is trading at these levels, we want to be very cautious because that's at fair value. So we're not going to try and force anything. We're going to wait for price to enter an area of discount or an area of premium and then look for an entry there. So as always, when I'm watching the NASDAQ, I'm also watching SPY right next to it because these two are correlated pairs. They move right next to each other. So they basically mimic each other's moves. So I'll have NASDAQ on the left. I'm going to have SPY on the right over here. Oops. We're on the daily time frame for each of them right now, and we're waiting to see which chart looks the cleanest so that way we can take a trade using the better chart or the better pair. So right now on the 27th, if we fast forward this one on the left, 27's over here. Cool. So daily time frame, they're both not really doing anything significant because they're both trading right around equilibrium level. Make SPY do this too. So we're going to go ahead and drop down to the 4-hour time frame to refine everything that we're looking at. So over here, I've highlighted a 4-hour breaker block for SPY on the right side. We also have a 4-hour breaker block for NASDAQ on the left side as well, which is going to be these two downmost candlesticks. And then we have displacement for both pairs right over here with this large black candlestick giving us that huge momentum move to the downside, leaving a fair value gap. So with that said, I'm going to go ahead and now drop down to the 1-hour time frame for both of them and refine this even more. So on the hourly time frame, we have price currently trading inside of a bearish fair value gap. So right over, let's see, right over here. So just to make it easy, since both of these move at the same exact time, I'm just going to use SPY because this is the trade that we actually took. We didn't take a NASDAQ trade. So move down to Monday. We see here that SPY is currently trading right next to this bearish hourly fair value gap. So this gave me a bearish bias for Monday morning. So now I'm going to drop down to the 5-minute time frame, and I'm going to highlight the market open for New York, which is going to be 9:30 a.m. New York time, and then 10 to 11, which is the silver bullet session. So if we rewind this down to here, we're going to watch the 5-minute and the 1-minute time frame, wait to see what sort of move the market opens with, and then look for some sort of ICT unicorn model form, either on the 1-minute or on the 5-minute time frame. So if we let this play out real quick, you'll see market opens, pumps. Right now, there's no news for this day, so we have nothing to really worry about. We're just going to wait for a clear trade to form out. Right now, we want to see how price reacts to this bearish fair value gap on the 1-hour time frame, so that way we can get some sort of ICT bear unicorn, because right now our higher time frame bias is bearish because price is trading right next to this bearish fair value gap. So on the 5-minute time frame, it's about to reach it, so let's go ahead and drop down to the 1-minute time frame to get a little bit of a clearer picture of what's actually happening here. So as price makes its way up, what is it doing? It's creating failure swings here, here, here. So these failure swings end up creating trendline liquidity, which gives price a very good incentive to go down and try to capture all the money resting inside trendline liquidity here, and also inside of these very large fair value gaps that it could go for. So there's lots of money here. Now we just need to see our actual trade entry populate, so that way we could enter the trade confidently and start making moves. I don't see anything yet. Right here, it's 10 o'clock. London close session is opening up right now. We want to see something significant happen because between 10 to 11 a.m. is going to be the first official open for New York session. So right here, we have a breaker block, which is going to be this 1-minute candlestick. We have displacement through that breaker block, leaving behind what? A bearish fair value gap overlapping with this bearish breaker block. So now we have our entry that we could use. Not only that, we also have a stop hunt as price trades above this swing high and then creates a change in the state of delivery to the downside. So we have the market going from a buy program over here to now shifting to a sell program right as it touched what? As it traded into the 1-hour bearish fair value gap. So price, before it even touches the bearish fair value gap, trades up and up and up. All of a sudden it touches it right over here and then shifts and creates displacement to the downside. So for my entry, I would place it right over here at the bottom of the breaker block. I'd place my stop loss right above the breaker block's high, and I would go for 2-to-1 risk to reward for my first TP. And then if you really want to, you can eventually target the bottom of these swing lows, which is going to be the full TP for the trendline liquidity. Or if you are really ballsy, you could target the full move of this fair value gap over here. So let's just watch how this plays out. So price tags us into our entry here as it trades into this bearish fair value gap. Tags into entry over here again if you missed it the first time. Tags into entry here and then starts dumping. Almost hits stop loss there. And eventually hits full take profit over here. So this is the exact trade that we took on the Discord on Monday. So here's the 27th. We have the breaker block that we highlighted. We have entry over here. and then full TP right over here. So now we're going to go ahead and move on to Tuesday. The next trade for that's going to be NQ on the Discord. So now we're going to be reviewing this trade on the 30th of NQ. So I'm going to go ahead and pull that up on TradingView, which is going to be US 100. We're going to rewind or fast forward all the way to the 30th of January, which is going to be Thursday. Tuesday we didn't take a trade, there was no entry, so no point reviewing that one. Wednesday we didn't take a trade, there was no entry. So here is the 30th coming up. I'm going to go ahead and stop right around London session. So before New York market even opens up, we're going to go ahead and check news. So Thursday, January 30th, we have red folder news at 8:30 for U.S. advanced GDP, and then unemployment claims. That's going to happen early in the morning before the market even opens up, so we're going to be fine. That'll already be done by the time we're actually looking for our trade setup. So if we fast forward to right around the open of New York, we're going to highlight several things and pay attention to several things. So first and foremost, what is our daily bias? So on the higher time frames, what is price currently doing on January 30th? Start off on the daily time frame. Price has currently touched and tapped into this daily imbalance candle. So what is an imbalance? It's basically a fair value gap. The only difference is it's just when the wicks of the candles just have no body whatsoever, and this is caused by a huge drop in price action or a huge increase in price action. In this case, this was caused by the tariffs that Trump announced over the weekend that caused the market to dump. And then 2 days later, he announced that Mexico and Canada ended up agreeing to his terms, so then the market started pumping up and recovering. So at this moment, I'm particularly bearish for Thursday. Why? Because price has currently respected this bearish daily fair value gap. So that's my bias going into today. Not only that, I've also highlighted the previous daily high created yesterday on yesterday on Wednesday during London session. And then I've also highlighted this morning's London session high. So we have two areas of buy side liquidity that we could see price go for before it makes the real move to the downside that agrees with our bearish bias. I've also highlighted 9:30 market open for New York, 10 to 11 o'clock a.m. for the silver bullet session, and then the macros as well. So we're going to go ahead and fast forward through this red folder news at 8:30. And we're going to wait to see what price action does at 9:30. So over here, I'm going to drop down to the 1 minute time frame. Right now, all these moves that price is currently doing, there's no entry here. Like, this is all just way too small for us to actually read any sort of price action, so not entering any of those moves whatsoever. Right over here, market's about to open at 9:30. So 9:30, market opens, dumps a little bit, goes up. So as it goes up, we have our breaker block over here. Now we need to see some sort of displacement to the downside, giving us our ICT unicorn entry. So there's displacement to the downside, leaving behind a bearish fair value gap. So like I said before, we have three things that occur. We have the breaker block, We have the stop hunt. We have displacement with fair value gap. So it has everything that we need. We can go ahead and enter here. And if I remember correctly, I think this trade loses, but let's go ahead and review it. So if we watch how this plays out, we get entered right around here, and then a couple minutes later, we get stopped out. So there's our first loss for this week. We are currently down 0.5% for this trade. So there's our first loser. And losers are completely okay, especially when everything fit according to your bias. But this day we also get a second entry over here. So if we watch price action and keep letting it do its thing, price eventually does what? Price takes out and trades above the previous daily high and London high created that same morning. Now, do we get displacement to the downside, leaving behind a unicorn entry? Let's find out. So go back on the 5-minute time frame to see what price is doing. What do we have there? We have our unicorn model. So we have the breaker block right over here, which is the series of down closed candlesticks. We have displacement through our breaker block, leaving behind a bearish fair value gap. And then we also have a stop hunt as well, as price trades above the previous daily high and London high as well, created that same day. So we have the same exact thing that we saw the first trade. Let's see if this one plays out. So entry over here, the bottom of the breaker block, stop loss right above the high. We're going to set our TP at plus 2R. And then we're going to see if this one ends up being successful or not. So we get entered right over here as this white candlestick trades into the breaker block. Then what happens? Price dumps to TP. So that's plus 2R there. So we're currently up just plus 1.5 after that first loss. So still not bad. And then for this week, we had plus 2R on the SPY trade, and then we had plus 1.5R on this NQ trade. So we're still up roughly like 2.5%, or I mean 3.5% for this week, so not bad. Does anyone have any questions about this trade so far, or want me to go over anything else? Or is this all kind of making sense to everyone?
Makes sense.
Rob, are you good?
Makes sense.
Cool. So the next trade that we're going to go ahead and review is going to be, let's see. It's going to be January 31st, and this is going to be a US oil trade. So let me go ahead and share my screen for that one. We're going to go ahead and go to US oil. Going to go on the daily time frame. I'm going to rewind all the way back to the 31st. Oh, perfect. Okay, February 31st. Cool. Okay, so right now, what is currently happening on the daily time frame? We have a series of down close candlesticks indicating bearish momentum to the downside, and right now we do not have any sort of bullish PD array that price is currently respecting, so this gives me a bearish bias. Gonna drop down to the 4 hour and see if we see anything else. So right now in the 4-hour time frame, we have this bearish fair value gap that is currently forming that we could highlight. Drop down to the 1-hour time frame, see if we see anything else. So we can refine this one up here. And then we have another small one in between these two black candlesticks over here. So now let's go ahead and drop down to the 5-minute time frame. Wait for the market to open. So 9:30 market opens right over here. Right now in the 15-minute time frame, price has disrespected this first bearish fair value gap, so we can go ahead and delete this because that's no longer valid. But what has price done? It's traded into this other 1-hour bearish fair value gap, and it's currently respecting it. So on the 15-minute time frame, all we need to see now is displacement to the downside, leaving behind a fair value gap in order to validate this breaker block that we've highlighted over here. So if we let this play out, let's see if we see displacement with a fair value gap. So there's clear and decisive displacement to the downside, leaving behind our bearish breaker block over here. Bearish fair value gap inside of our bearish breaker block. So our entry would be right at the start of this breaker block. Stop loss would be right above the breaker block's high. And then we would target 2-to-1 risk to reward for our take profit. So that's going to be right over here. Now we have to do is just wait for 9:30 market to open. What does price do? Pumps straight up, taps into that first fair value gap and straight into our breaker block. Now let's see what happens. Loser. So minus 0.5 there. And what news do we have that day and Friday too? Let me pull that up. Oh yeah, red folder news that happened at 8:30. So this was fine. Does anyone have any questions about this trade?
Go over the breaker block one more time for this trade.
Yeah, so the breaker block is going to be the series of down close candlesticks over here, which is going to be these 4 black candlesticks. And the reason why it's 4 of them is because we're going to use the series of down close candlesticks before price goes up and takes out an area of liquidity or a stop hunt, which is going to be anything that goes above this swing high, which is going to be this candlestick over here, the black one.
Makes sense.
Cool. All right, what's our next trade? All right. And this was after we already ran up our 2% weekly profit target. So like I said before, our goal every single week is ideally hit 2% profits. Ideally after that you're supposed to stop. In this case, I was already up, so I didn't, and I learned my lesson. So next trade that we have is going to be SPY on February 3rd, 2025. So I'm going to go ahead and pull up SPY on TradingView real quick. And this is actually a trade that I caught on my birthday, so I was happy with this one. So here we are on February 3rd, 2025 for SPY. If we go ahead and rewind this, before the market opens, always check news. So let's pull up February 3rd. What do we see? We see 10 a.m. red folder news PMI. Now, I don't consider this to be real red folder news because it really doesn't affect the market too much, and you're going to see that in the chart. The only red folder news that I would actually make you guys pay attention to and not really trade before or after is going to be FOMC, CPI, and then NFP. So this, I'm trading during this because it's bullshit news. No one really cares about PMI. So I'm going to go ahead and mark out everything like I do before. 9:30 market open, 10 to 11 a.m. silver bullet session, and the first hourly macros of the day. I've also highlighted London high, created that same morning. That's also in line with this high created between London and New York session. So we have relative equal highs over there. So that's going to be our buy side liquidity. And then we also have this low that we could use for our take profit if we do get some sort of displacement to the downside. So if we go ahead and drop down to the 1 minute time frame, we can see how the market reacts to the 9:30 market open. So let me just fast forward to that. As you can see, before the market opens, there's literally no moves that you could make over here. So I wouldn't even bother trading before market opens. Right at market open, what do we see? Market starts pumping. Pumping more. It has traded through London high, aka buy side liquidity, but it has not given us displacement to the downside yet, so there is no entry. Market pumps up one more time, takes out this swing high, creating a stop hunt. Now let's see if there's displacement to the downside. So there's displacement to the downside right over here. Again, we have everything that we need. We have a stop hunt. We have a breaker block. We have displacement plus an FVG. So on this particular day, if we go up to the daily time frame and see what our higher time frame bias was, it is technically bullish, but at the same time too, price has also respected this daily imbalance between these two candlesticks. So when you have price trading in between a bearish and bullish PD array and it's respecting both of them, that's a neutral bias. So for you as a price action trader, you're not going to try to impose your own bias onto the marketplace. You're going to try and figure out what the marketplace is trying to do and read it. And if it gives you a buy setup or it gives you a short setup, then take that. As long as you have clear take profits and very clear areas of liquidity that price needs to go for before you enter a trade. So in this instance, price is going from external range liquidity back to internal range liquidity. We have London high and these equal highs acting as buy side liquidity and external range liquidity. Why? Because there's swing highs. So there's liquidity resting above the highs of each of these candlesticks over here. What does price do? It pumps up at market open, takes out external range liquidity right after the money's taken, creates a market structure breakthrough to the downside, leaving behind a fair value gap. We enter. As price taps into the breaker block, we place our stop loss above the breaker block's high, and we target 2 to 1, which is also in line with what? Our swing low, aka external range liquidity, or this fair value gap over here. So as price taps us into entry over here, all we have to do now is make sure our stop loss is set and make sure our TP is set, and then we wait. Eventually, price ends up hitting TP right around 10 a.m., which is the first hour of the macro. And there's full TP right over there. Does anyone have any questions about this trade?
Could you go over just in general
Yeah.
how you set up your stop loss? Because I know you use the breaker blocks, and I just want to confirm that it's the two black bars, and you look for those.
Yeah. Stop loss is always going to be either, if it's a sell trade, your stop loss is going to always be just above the top of the breaker block. If it's a buy trade, it's going to be just below the bottom of the breaker block. So real quick, on the Discord over here, I share a picture with you guys that you can print out and post on your wall so that way you can look at it every single day until you memorize it. You have stop loss at the bottom of this breaker block over here. So for this example, on the higher time frame, price has traded into a 15-minute bullish fair value gap. What does price do after it trades into this 15-minute bullish fair value gap? Price creates a 1-minute ICT bullish unicorn. So we have trading into the PD array. It creates a stop hunt by trading below the swing low. Our breaker block is going to be the series of up close candlesticks because this is a bullish ICT unicorn. So it's going to be these series of white candlesticks over here. We have displacement to the upside, leaving behind a fair value gap. Price drops down, trades into that fair value gap, and then we target 2R. And this example over here, price on the higher time frame bias is bearish. Why? Because it's currently trading inside of this big 1 hour fair value gap. What happens is price trades into this 1 hour fair value gap. Price creates a shift in market structure by creating a stop hunt above here. Displacement to the downside through the breaker block, leaving behind a fair value gap. Price then trades back into the breaker block. Stop loss is above the breaker block's high, and we target 2-to-1 risk to reward, which is right at this swing low over here. Does that make sense?
Yeah, so you said the stop loss for the breaker blocks, not the fair value gap.
No. Yes, stop loss. When it comes to the unicorn model, you always use the breaker block, not the fair value gap. If you really want to, though, and you want to be a little bit more aggressive with a better risk to reward ratio, you can use, like for example, for this trade right over here, you can use this fair value gap as your stop loss. But for my personal preference, I like to use the breaker block just because you can get stopped out very easily over here, and then the trade could still play out just as well. Does that help?
Yep.
Cool. Jared, do you have any questions about this? All right. So the next trade that we're going to be watching is going to be on February 5th. This is going to be the NASDAQ on the 15-minute time frame. Now for this one, on this live stream, this is something that we were only monitoring on TradingView. I did not take this, and the reason why I did not take this is because that's the day that NFP news drops. So I'd never trade on a Friday during NFP just because price action is going to be shit. And if you look at this model anyway, this entry model looks like shit too compared to all the other ones that I've shown you. Like there's the displacement to the upside here is not as strong or not as clean as the other displacement candlesticks that I've shown you in the previous trades. So let's just go ahead and review this one real quick. So we're going to go ahead and go to NASDAQ. It's going to be US 100. And then I'm going to go to February 5th, 2025. All right. So that's going to be right here on Wednesday. Before we look at the charts, let's go ahead and look at the news. February 5th. Oh, so this is the start of NFP. So non-farm unemployment, then we also have PMI. So if we go ahead and rewind this, drop down over here, what do we see? So on the higher time frame, price is currently doing what? It's currently trading inside of this daily fair value gap that is bearish. We drop down to the 4-hour time frame. We can refine this even more so. Where is it at right now? It's currently trading inside of this 4-hour bullish fair value gap. If we drop down to the 1-hour time frame, it's still currently trading inside this 1-hour bullish fair value gap. So we have price trading inside of a bullish PD array and currently respecting it. This gives me a bullish bias for this day. So with that being said, I'm only going to be looking for bullish ICT unicorn entries. If I see a short entry, I'm not going to take that because I'm not going to go against my bias. I'm fine getting my bias wrong and not taking a trade versus taking a trade even though my bias is wrong and building bad habits. One trade isn't going to change your life, so there's no reason for you to try and be impulsive and chase these trades or just change your plan after you've established a bias. So with that being said, I'm going to go ahead and drop down to the 15-minute time frame because that's where this trade occurs. We have this breaker block, these two white candlesticks that we're using as our breaker block created during the London session. We have the market open right at 9:30, Price is going to be right over here. And we're going to wait and see how price reacts to this setup that we've outlined. So never enter a trade before market opens. Market opens right over here. What does price do? Pumps up a little bit. Not only that, we also have equal highs over here, so price has a clear incentive to trade higher. And then we also have what? We have trend line liquidity from here to here. So we have lots of liquidity that price can go for and accumulate. So with that being said, if you watch how this trade plays out, you can see right at 9:30 market open, we do not have an entry because price does not trade into our breaker block. We have our entry hit right over here at 10 o'clock as price touches down into the breaker block. Entry is at the breaker block high, stop loss is at the breaker block low. TP is at equal highs, so this gives you a 3.28 to 1 risk to reward ratio. What does price do? Eventually hits TP right over here. So, does anyone have any questions about this trade? Rob, are you good?
Okay.
Sweet.
Actually, I did have one question. Actually, for the fair value gap there,
Yeah.
was that the big? Actually, never mind. Go back to the real quick.
Yeah, you see it?
Oh, I see. So you use the fair value gap from yeah, I see.
Yeah, the 1 hour fair value gap.
That makes sense.
All right. So next trade that we're going to be looking for is going to be February 6, 2025, ICT Unicorn 5-minute setup. This happened on Thursday during NFP week. So let's go ahead and review this one. And this was for NQ. So we're going to go ahead and fast forward to Thursday real quick. Okay, so there's Thursday. Right before market open right over here. So before we look at the chart, look at news. Thursday unemployment claims at 8:30. That's not relative to us because we're going to be trading after 8:30, so we'll be fine. Always start off on the higher time frame, which is going to be the daily. What do we see here? Price is currently trading above this daily bearish fair value gap. This has let us know that price is currently disrespecting this bearish fair value gap. So since price is disrespecting a bearish fair value gap and trending higher, this gives me a bullish bias. So I'm going to go ahead and drop down to the 4-hour time frame. Right now, price still isn't doing anything relative that we need to be paying attention to. We drop down to the 1-hour time frame. What do we see here? Price is currently trading into these two 1-hour bearish fair value gaps, and it has already disrespected this first one over here. So I'm going to go ahead and erase that one because that's not relative to us. I'm only going to be paying attention to this one over here. But right now my bias is still bullish because on the higher time frame it's disrespecting bearish fair value gaps. So on the 5-minute time frame, I've outlined 9:30 market open. I've highlighted this 1-hour bullish fair value gap. The price is currently trading above. The price is currently respecting. And then we're going to go ahead and pull up 10 to 11 a.m., which is going to be the silver bullet session. And then I'm also going to highlight 9:50 to 10:10 and 10:50 to 11:10, which is the first hourly macro for New York. So with that said, let's go ahead and watch how this plays out. As you can see, price has already entered into this trade before the market even opened. So we're still waiting on an entry. For my breaker block, I am using these two white candlesticks before the move to the downside. And then for our displacement, I have this very, very small bullish fair value gap that's also inside of this 1 hour bullish fair value gap. So there's everything that I'm using for this trade setup. And then for my take profit, I'm using equal highs. I'm using equal highs, which is clear liquidity that price can target as soon as it touches our entries. So with that said, as you can see here, displacement, like I said before, is not as clean as the previous trades that I've shown you. Why? Because it's NFP week. NFP is going to have shitty price action. So fast forward to 9:30. What does the market do at 9:30? Drop straight into the breaker block, entering this position. Now, with that being said, let's go ahead and see how it plays out. Eventually hits TP right over here at equal highs. So from start to finish, this trade took from 9:30 to 10:10 about like 40 minutes. And then watch what happens after it hits TP. What does price do? Reverses completely back to entry over here. So very clean take profit target. A very mid setup, but a ICT unicorn setup nonetheless. Does anyone have any questions for this? Rob, are you good?
I'm all good. I did have a question on when you start your morning.
Mm-hmm.
I know you have a few favorites of US 100, US 500, oil. How do you go about choosing what you're gonna trade that day? You can look at all the daily basis for all of them.
I look at the daily time frames for every single one of them, and then I move down from the daily to the 1 hour time frames like I was showing you guys. And then all I really do is I see which one is currently respecting the PD arrays the most and which one has the cleanest price action. So for example, you're going to see days where I'm live streaming, and then you're going to see days where, like, for example, NQ has clear and decisive displacement to the upside, and it has clear equal highs that it can target for TP. Whereas if we look at SPY, the displacement is very weak, and it also doesn't have equal highs for TP. So in that case, NQ would be the better pair just because it has clear TPs and it already has a clear displacement. So I would choose NQ over SPY. It's all about just what's the cleaner setup for you. You can,
Makes sense.
yeah, when I was a degenerate, bro, I would just trade, because in my head, when I first started trading, I was like, US 100 and US 500 are correlated pairs, so they move the exact same way. Why not I just trade both of them and make double the money? And then I started doing that, and then I realized, oh wow, like one has better price action than the other. So the first couple times I would do that, I would win double, and then sometimes I would lose double, and it would suck. But then I figured, okay, why don't I just stop doing both at the same time, and I just choose the one that has clear price action and just stick with that one because it just makes more sense. And honestly, it helps you a lot more mentally when you can just focus on one thing instead of trying to monitor three different trades going on.
Makes sense.
Cool. So that was the last trade.
When do you live stream now?
What'd you say?
Usually, when do you live stream usually during the week?
Yeah, so live stream schedule is always going to be in the Discord. So it's going to be from 8:30 a.m. New York time. I mean 8:30 a.m. Central to 10:30 a.m. Central. So that's going to be 9:30 a.m. New York to 11:30 New York basically. And if there's anything that changes, I'll always post it on the Discord over here and in the announcements channel all the way at the top.
Sweet.
Cool. Yeah, but that was the last trade that we reviewed this week. So you guys have no questions about that or anything?
No.
Makes sense to me.
Sweet. Cool. I'm gonna go ahead and save this video and then I'll post it on the YouTube and then post it on the Discord when it's ready. But yeah, besides that, if you guys have anything else for me or any questions in the future, just let me know in the Discord.